Good morning, everyone, and welcome back. Welcome back. So, I was meant to drop a video yesterday evening. I did dropped it. I did dropped it. I did dropped it. I did dropped it. Let me see. Oh, okay. I did drop the video. I did dropped it. But what happened was the connection. The audio was not audible. The audio was not audible. So I did drop the video, but the audio was not audible. So I still kept it for private. But what I'm going to do is I'm going to reverse the private effect on it. Once I'm done with this particular video, I'll make it public so you can understand what happened yesterday. And I don't know whether I mentioned it in the morning before this, whether it was part of my morning analysis for this particular entry. Let me take off this. Let me take this off. Let me take this off. And let me take this off. Take this off. For this particular entry, that we have here for a sale. So we had an entry here for a sale, which I took, but what happened was my prop account. I lost my prop account yesterday night because of they call it lifetime breach. Something I'm unfamiliar with. They call it lifetime breach, but that's by the way. So I was able to. So this would have been a trade idea that I would have placed on my prop account, but I lost it yesterday night. Right, I lost it yesterday night. But yeah, so it's going to be in the video I'm going to be showing you. So this was a sale opportunity. So how do we arrive at the sale opportunity from yesterday? How do you arrive at the sale opportunity from yesterday? So we had this FVG right here. This FVG right here that price had previously obeyed. Price had previously obeyed, right? So upon the market reversing, we have like a broader analysis of everything that is happening here from Monday that we started the video. We had a broader analysis. Okay, we had a lower low, so we're expecting the market to still price down and whatnot. You understand? So that was that on that particular analysis. So expectancy of the market to stay price down. The question is, where would we be placing where would we be placing our trades? Where would we be placing our trades? So we have this SVG here that was validated previously, right? So and then we're expecting the market. Okay, if it was still going to buy when it comes into this gap, it should not the 50% of the opening week gap should be able to like hold it, should be able to like make it reverse, right? If the bias does not come in, then most likely the market is going to what? Continue lower, and possibly drop up to the slow, drop up to this slow. So that's the expectancy for this particular trade that we could have been in. We could have been in, right? Based on that trade and again. So the whole of this is just for you to see how the analysis plays, how one analyzes the market and whatnot. Not any form of financial advice whatsoever. Not any form of financial advice whatsoever. Yes, not any form of financial advice whatsoever. So since we have the FVG here, validated here, once we broke through this particular 50% encroachment and then we broke downwards, we're expecting that this would have been like our best point of entry. This could have been our best point of entry. And then we see when the market came back there, we were unable to close above the 50% of it, right? Yeah, we weak into it, but we're unable to close above the 50%, right? So that would have been a perfect entry, but there's nothing like a perfect entry. There's nothing like a perfect entry. You look at other ideas that could have played out, right? So we saw this particular VG here. It coincides with this one. It coincides with this one. It coincides with this one. So the idea was to place the trade on this. Let me dim this a little so you could see it. Let me dim that a little. Let me see. No, start background. So I'm going to just dim this one a little. Yeah. So just dim it a little. So this one right here, this was the 50%. So the idea was, okay, these two are relative to each other. These two are relative to each other. So we can't tell completely how the market will decide to react, right? So the idea was to sell on the 50% of this one, sell on the 50% of this one, and set stop loss right about this point while we target the low, while we target the low, while we target the low. So that's it. So that was the trade idea. But the low was extended like for the market to get to this point. It should break this particular low and then the market should get to this point. That was the expectancy for the market right now. That's the expectancy for the market right now because I believe if the market is going to be dropping downwards, right? Like I said, we're not trying to like predict turning point, but rather we can just say, okay, this is the most this is the most like vital point that can reverse the market. This is where the market could possibly reverse from. This is where the market could possibly reverse from. So in that understanding, if you go to the daily time frame, that I'm sure that's the reason we had this particular big boy here. Okay. Okay, let me check for hours. Let me check for hours. Check for hours. All right. So this particular big guy here, this particular big guy here was an FVG that the market has been unable to close below. So we expect that if this sell is going to be very, very valid, it's going to actually break out of it. It's going to actually break out of it. And then if it's breaking out of it, what's our next point of conference? We are looking the market to like possibly reverse from. It's going to like reverse from the 50% of this, like this, the opening gap from the last 2 weeks, the opening gap from the last 2 weeks, the opening gap from the last 2 weeks. So if you are dropping, the market should, if the buyers are still going to be in control, they shouldn't be like, they should take control from here. Like they should not allow this one also to like take them. They should not allow the sellers to like take them out at this point also. They should not allow the sellers to take them out at this point also. So this should have been like our overall entry exit approach where we are with other reversals. But then the most ideal exit would be here. This is the most ideal exit, this particular low here. That's the most ideal exit. That's the most ideal exit point. Yes. So that's the trade idea on GU. That's the trade analysis on GU. That's the trade analysis on GU. Please, this should don't drive you to go and place a trade or take any position, as you can see. So it's meant to be informational. So you see how anyone can read the market, how anyone can read the market. So that's one thing, how anyone can read the market. And then for Bitcoin, yeah. So for Bitcoin, going to 15 minutes. In that particular video for Bitcoin, where the video ended yesterday afternoon, the one which is posted already, is just on private, is on private. So I'm going to take it back to public. The only difficulty is that you wouldn't be able to hear the audio. So we were trading at this point. We're trading at this point, and then I was saying something like, okay, if Bitcoin is to reverse, this FVG levels 1, 2, 3 were the point where it could possibly reverse from. These FVG levels were the point where it could possibly reverse from, right? So the first point where it gave us was this one, whereby we had this reversal, right? And then when we had the reversal, before I ended the video yesterday, I said that if we are going to reverse, we should look at this particular gap from this one to the closing gap price of that particular candle itself. If you look at that particular gap, the market should know what close above it, right? And even still, we still have this high to clear here, this high which coincides with an FVG. We still have another FVG immediately after that also. So you can see like we have a lot of things that could have sent us downward. And what happened? I ended the video around here. I said, imagine you were demo trading. If you're demo trading, then you enter because of its close here alone. That was not enough confidence. When it got to this point, the market reversed and then it priced into this FVG. So it was from this FVG we saw a reversal, right? Now we came back to this FVG here. We came back to this FVG here, and then we now closed above it, right? Upon closing above this FVG, this one right here, this one right here, if you look to this point, you see that the 50% was validated multiple times. It was validated multiple times before we actually closed above it. The 50% was validated multiple times. So upon reversal, this was like a good entry point for Bitcoin. That was like a good entry point for Bitcoin. Let me make this bold. That was like a entry point for Bitcoin, right? Now, the trade idea for this one was I took the okay. I didn't take the trade. Like trade idea. The reason you are seeing this here was because okay, I said I was like reasoning within myself that if anyone wants to take this trade, so you place the buy. Say you awaited the confirmation, you place the buy upon the close of this particular gray candle, and then you set your stop loss right about here, right? And then your profit is at this level. This is your take profit at this level. That was it. So if you check the video, you see that this was already marked out. This was already marked out, this particular AVG as a possible reversal point for the market. It was already marked out as a possible reversal point for the market. So that was the trade idea. That was the trade idea. And then that would have been like a good profitable trade. That could have been a good profitable trade, right? Now, what are we looking at for today with Bitcoin? What are we looking at for today with Bitcoin? So I'll go to the daily time frame and say a few things about what you mentioned yesterday, and then that'll be it on today's analysis. That'll be it on today's analysis. Then should we check gold? So if you are checking gold, everything is going to be based on just like how anyone could break down the market. Just try to look at market, look at the gaps, as though look at the gap like they matter. Like look at every point in the market like they matter, right? And then this is not a rigid rule, right? So you could have placed a trade at this point and you'd have lost. I think the reception is not too good. Let me change screen. Okay. Okay. Reception is not so good right now. Reception is not so good right now. I should just close one of these and leave this other one. Yeah. Okay. So I don't know. Maybe they don't want us to discuss. Let me refresh. Right? But you see what the market did when it got here? It wicked out of it before what? Reversing and then turning down. But it hasn't gone far, right? So structurally, if I'm to sell right now, I'm going to expect one thing first. I'm going to expect to break this particular big boy here. I'm going to expect to break this particular big boy here, this low. I'm going to expect to break this particular low, right? That's my first expectancy. I'm going to expect to break that particular low at that point before I start looking at a sell opportunity. I'm going to expect to break that particular low at that point. And once we are able to break this low, once you're able to break this low, there may be a possible reversal back into this FVG. Would be a selling opportunity. But first, we have to break this low. We have to break this low. We have to break this low. So that's like me analyzing the charts in real time. So from the analysis I'll make this afternoon, we might see what would have happened before then. We might see what would have happened before then. And that's that on Bitcoin. That's that on Bitcoin. So yeah, that's that on Bitcoin. Can we do gold? Can we do gold? All right. So I said a few things on gold also yesterday. I said a few things on gold yesterday. I said a few things on gold yesterday. I think gold might just be going. Gold might. Okay. You see the way gold just behaved there and then it dumped. So I believe the same thing might happen. The same thing is to happen here. The same thing is to happen here because of something which we have here. So this first, if you check the daily candle, how the daily closed, first of all, from the daily perspective, we close below the 50% of this particular week from the daily time frame. We close below the 50% of this particular week from the daily time frame. Then if we drop to the 4-hour time frame, right? We had this other week from here to here. we had this other week from year to year. The market was um, trying as much as possible not to close below it multiple times. This was like multiple 4 hour candles that we're trying not to close below it. And now, what do we have? We've closed below it. We've closed below it now. We've closed below it now. We might not be trading. We don't need to necessarily trade like be expecting like a deep retracement or something of that manner. We don't need to expect a deep retracement or something of that manner. We can check within the immediate trend now and see if there's a trade opportunity. Checking within the immediate trend for a trade opportunity. That would be just us going down to 15 minutes possibly for a trade opportunity. All right. So this was something that we're looking at. This was something we're looking at. Okay, let me take this off for now. For now. Yeah, this. Okay. Okay. So I don't see much of a trade opportunity. That's the honest truth. I don't see much of a trade opportunity. Although we've closed below this. If you go back to the 4 hours first, if you go back to the 4 hours first, if you go back to the 4 hours first, we've closed below this particular 50% level of this week here that could have like acted as support for price. We've closed below it now on this particular candle here. We've closed below it. So there's expectancy of the market to like go lower. There's expectancy of the market to go lower. And if it's going to go lower, we don't have averages around here. It's going to go lower. We can just respect the 50% that are immediate. We can just respect. We can just respect the 50, the weeks, right? We can respect the weeks. We can respect the weeks and set them as our possible targets. Can set them as our possible targets. That's one thing we can do. Can set them as our possible targets. So when week is not forming in the chart, you make use of your AVG. When average is not forming, you make use of your weeks. So that's just that's what you've been getting from me from some period of time now, and it's normal. It's normal. It's normal, right? It's very normal. So um, let's capture that with some good precision. Let's capture that with some good precision. 4, 5, 6, 8. And 4, 5, 2, 9, 5, 4, 5. So we've captured that with some good precision. So let's do the same for this. The low 4, 4, 8, 2, 6, 6. And then the opening 4, 5, 1, 7, 7, 1. All right. So capture that also. Capture that also. So we have the point you are trading at. We've closed below this. We've closed below this. And the question is, how do we possibly join a trade? How do we possibly join a trade? That's the question now. How do we possibly join a trade? How do you possibly join it? How do you possibly like place a position? Now, okay, let me assess this so you understand what I always mean when I'm saying you can't be wrong. It's normal to be wrong. It's not as though like okay, you're trading and then everything has to be perfect. It doesn't have to be perfect. One thing you should do is I'm trading, but I'm not trading recklessly. If you're not trading recklessly, then you're on the way to profitability. You're not trading recklessly. You're on the way to profitability, and profitability is a journey. It's a journey, right? It's a journey. It's a journey. If you're not trading recklessly, you're on your way to profitability. I'm telling myself the same thing also. If I'm not trading recklessly, I'm on my way to profitability. And I don't have to like run or overburden myself, right? Just embrace the process, learn and repeat. Embrace the process, learn and repeat. So for me, if I'm going to be placing a sell trade, I'm going to like look at this FVG here, right here. Yes. So that's the point I'm going to be looking to sell from. If I'm going to sell, which I'm going to try and do live on this video, Well, I just say a few words, possibly share my screen, possibly. Yeah, share my camera and we can see a few things. So let me see what we have here. Let me see what we have here. Let me see what we have here. Okay. So something is there are no much FVG for me to rely on, right? Are you with me? There are no much FVG for me to rely on. That's one thing. That's first and first. So I can, based on that, I look to this point and look at for FVGs that has been previously validated, or it was invalidated, but then it was revalidated. So we have this one here. We have this one here. This one. So it was an FVG right here. It was validated for some period. It was invalidated, but it has not yet like been revalidated or anything like that. And then we have this one here. We have this one here. But in cases like this, you don't need to force anything. You don't need to force anything. This is where you can now try and rely on your week. I said your week on your fibs. This is the point where you can try and rely on your fibs. Try and rely on your fibs. Okay. Try and rely on your fibs. Strength fib. Okay. So this is a point where you can rely on your fib. Like I was saying, this is a point where you can rely on your fib and trade from your 0.71 to 0.786 range, right? Okay, you have a confluence. Okay, from your analysis, you expect the market should go down. From your analysis, you are convinced that the market should go down. Are you with me? You are convinced that the market should go down from your analysis. So, but to buttress our analysis, I said it in my one of my videos that I always try and limit myself to 15%. But in cases where I don't find FVGs, that's when I go down to the 5%. That's when I go down to the 5%. And in our case, is it going to be good? Let's see. We have this inverted. Okay, we have something. We have this. Okay, so that's it. We can use this inverted FVG to trade. That's a trade idea. That's it. That's like, okay, we have this trade idea. Does that mean it's going to be validated or it's going to, so the FVG we have here, right? The market didn't obey it at any point, but then I said the market didn't obey it at any point. That was a mistake. The market didn't obey it at first, but then later on, the market what? The market um, used it as support. The market used it as support. But it was unable to continue lower, right? The market used it as support, it was unable to continue lower, one. And then the second thing is it coincides with our 0.71. It coincides with our 0.71. So it would be a good entry point for a short trade. And then your stop loss just right about here. And your target right about here. So this should be your first target. So this should be a first target, right? That should be a first target. So let's set alarm to that price point. So that should be a first target for a possible sell. Yes, that should be a sell target. That should be our first target. And then you know the drill. These are second targets. And finally, here's the, let me see, can we call it overall already? If we drop to, as we're on the 15 minutes time frame, if we go to the 15-minute time frame, we could remodify our price. Okay. Not much everything. Okay. We're using weeks. Don't let us forget that. We could, I wanted to say we could remodify our weeks, but there's no much week for us to modify here. So most likely the good trade has potential of trading all the way to this point, trading all the way to this point, because we don't have um, we don't have much of FVGs that can reverse it, right? Like there's no point where buyers and sellers will need to come in and argue that, oh, let me be the one to take decisions, let me be the one to take what not. So that's one of the wonderful thing about the trade. If we're able to like get the proper reversal, we're able to get the proper reversal. That's one of the beautiful thing about the trade. If you're able to get the proper reversal. So that's the trade idea on gold. That's the trade idea on gold. So if market gets to this point, we place a possible trade and then we look at how the markets play out. So I'm going to leave this analysis here as it is. I'm going to leave it here as it is and just let the market do its thing or do our thing. Anyone. So let's discuss. I'm going to try and connect. I'm going to try and connect. I'm going to try and connect. What's it called now? I'm going to try and connect. I'm going to try and connect an audio. My camera. That's my tab camera. I'm going to try and connect it, and the hopefully we'll be back. I'm coming. I'm going to connect it. I'm going to connect back to my personal spot. I'm going to connect back to my personal spot so we don't burn someone else's data. You don't want to send someone. You don't want to like exhaust someone else's data just because you are doing your own stuff. Charlie in Nigeria. Okay, so I'm trying to